What's up everyone, it's Scotty with Money Investing. So in this video, we are going to be talking about a brand new high quality company which is non-tech. So it doesn't belong to the high tech, big tech sector. In fact, it is a very discretionary company, a company that we have never talked about on the channel, but it's always been on the radar for a very high quality business. So hope you guys are doing great, and I have been traveling a little bit. Now I am in a brand new place, so hope you guys enjoyed this video. Find it helpful. If you do, make sure that you drop a like. Don't forget to subscribe to the channel if you're just joining us for the first time. And the link to our Discord and Patreon is going to be down below. Don't forget there is a 16% annual discount available if you want to join our Discord before this month ends. And not to mention the brand new option scores that's also available if you want to take advantage of that as well. Coupon code LAUNCH for a 50% discount, and of course the bundle, the full fundamental, technical analysis, and option scores bundle, all three courses in one single bundle. That's also going to be 50% off if you want to take advantage of that as well. And finally, we do have a lower priced tier for our Discord, which will give you access to our private Discord channels, along with market updates and analysis and private members only videos as well. So there's a lot of benefits, a lot of educational materials, tutorials, private Discord chat, and of course courses and a lot of different things. So again, link's gonna be down below if you're interested in joining and taking advantage of those deals. So the company that we are talking about today, which a lot of our members have been talking about in the Discord as well, is going to be none other than Crocs. Ticker symbol CROX, and Crocs here trading at just over $108 today. It is up close to 6% on the day, so very, very nice move to the upside. But they did report earnings earlier this week. In fact, yesterday, they did drop a little bit over 14% after beating EPS and also beating revenue. So we're going to take a look at this company, talk a little bit about the valuation. Crocs was one of the biggest beneficiaries during that 2020 pandemic, and of course surging all the way up to a new all-time high. So you'll notice that it was trading as low as $8 per share back in March of 2020. It rallied over 2,000%. For some reason, it ballooned to 2,000%, and then of course dropped pretty aggressively as we saw a bit of a valuation reset. So 75% sell-off, and then since it more than doubled once again, and now it has settled in at just over $100 per share. So it's been incredibly volatile. It's been all over the place. So this right here are going to be their most recent quarterly numbers. So second quarter 2023, they actually achieved a record revenue of over $1 billion and a 12% constant currency basis growth year over year. Asia revenues were up 39%, direct to consumer comparable sales growth of over 20%, and North American revenues were up 13% on a year-over-year basis as well. And then they've also got another brand, which I've never been able to pronounce. I think it's Hey Dude. That's the brand. That's how you say it. But revenues were up 239 million, up 3%, and direct to consumer up 30%, and digital sales were also up 37%, with adjusted diluted earnings per share up 11% year over year to $3.59 per share for the company. So diversifying the Crocs clog silhouette, I don't know how you say that word. It's kind of complicated. Let me see how you actually say it. Yeah, I don't think you can do that. But Echo, Dylan, and Siren, some of the other sort of brand lines that they are also launching, some of the other footwear. And who would have thought, right? Who would have thought that a sandals brand would be something that's so successful? And speaking of sandals, they mentioned importance of sandals to the Crocs brand. 30 billion global footwear market. Our model technologies, accessible price points, and strong go-to-market allows us to completely change the way people obviously look at these footwear and compete effectively as well. And who would have thought? I mean, they actually have a lot of patents on this technology as well. The way this footwear is actually constructed and designed and manufactured, they've got patents around that. So they do have a pretty significant moat. And of course, not to mention the actual brand for Crocs is pretty popular, right? Especially in North America, Crocs are very, very popular. Maybe it's not so much in Asia, but that's really where their goal is, right? Asia is an important driver for long-term growth, and they want to really crack down on this market and enhance some of that potential in that market as well. So in Asia, growth was broad-based with strong brand momentum throughout the region, including China, Australia, South Korea, and Southeast Asia. And China revenues grew triple digits in the second quarter and up 47% year over year to $567 million in Asia Pacific revenues as well. This right here, again, are going to be some of those numbers. So $1 billion in revenue, up 12% year over year. Gross margins coming in at just under 58%, up 6.3% on a year-over-year basis. And again, diluted EPS coming in at 31% growth up to $3.39. And this right here is going to be the entire fundamentals. Now, the company's been stagnated for a long time. So you'll notice that since 2013 all the way through 2019, the revenues didn't really grow all that much. They were pretty much stagnant. They were very, very flat. But of course, after the pandemic, something spurred with Crocs' brand, and now you'll notice that they are moving in the right direction. 1.2, 1.4, 2.3, 3.5. So they are definitely growing very rapidly, and the gross profit also moving in the right direction more recently. And they are also achieving some very significant operating income with some strong margins for the company as well. And the company's also buying back shares. So they have gone from just under 90 million shares to a little bit over 62 million shares outstanding. So they have consistently bought back shares every single year over the last about 9 years. When it comes to margins, again, Crocs, very strong margins, 54, 55% gross profit margins. We're looking at net margins at over 70%. I think that can certainly be improved over time. And then we've obviously got very, very incredible return on common equity, capital, and assets at over 80%. We got 19%, 14% respectively. Now, the balance sheet is a little bit of a concern because the company's got little to no cash, $166 million worth of cash, with about $2.2 billion worth of debt. And of course, net debt sitting at just over $2 billion for the company as well. So we do have a pretty, concerning balance sheet for Crocs. Current ratio is over 1.6, which is good, but quick ratio when you exclude for inventory, it's sitting at a little bit under 1. So that's something to keep in mind because the balance sheet is not that great. Now, valuation is low despite the volatility and what we have seen from Crocs. It is trading at a little bit over 8 to 9 times earnings. And price to sales trading at a little bit under 2, price to cash flow a little bit under 8. So we've got a low valuation, a potentially growing business, which again, if you take a look at the earnings expectations, they are expected to go from like $12 to over $19 per share. That's a CAGR of a little bit over 12%. So compounded annual growth rate of over 12% over the next 4 to 5 years for the company. So the plus points are going to be good margins, very strong profitability. We've got good, consistently growing revenues, earnings, and profits. And the forecast is also pretty strong. We've got consistent share buybacks. And of course, not to mention a very strong brand with significant moat and a lot of patents as well. Concerning factors, we've got the balance sheet, which again is a pretty significant concern because they've got little to no cash with a lot of debt. And of course, a very poor quick ratio with a very high debt to free cash flow. And of course, if the market continues to stagnate or saturate a little bit, it could be difficult for Crocs to keep growing, as we have already seen in the last, let's say, 7 to 8 years when the market was pretty stagnant. Crocs didn't really go anywhere. It was just really trading sideways. In other words, the revenues were very, very flat. It's only up until recently in the last 2 to 3 years when the revenues have started going higher moving forward as well. So if you plug in some of these numbers into our spreadsheet, you'll notice that the growth rate is a little bit over 12%, as I pointed out earlier, and the share buyback is just under 4% for the company. So if you plug in those numbers here, so let's just do minus 3.85%. We're going to go with 12% growth rate. We're going to go with a P multiple of 10 times, which again is going to be a little bit higher than where it's trading at the moment. A discount rate of about 12% because I don't think they pay a dividend. They don't. And then margin of safety, we're going to go with 10%. I'm pretty sure, again, I'm going to be confident that it is actually going to be trading either at or very close to fair value, okay? So we're going to do our analysis now. So I'm going to hit enter, and we'll take a look at where it's trading at the moment. So if we come down, by the way, right now it's trading at $107.76. If you come down, the fair value ends up at close to 135. There we go. So it is actually, or would be considered as a little bit of an undervalued stock, considering the P multiple is so low. We've seen consistent share buybacks, and this is after accounting for a 10% margin of safety and a 12% growth rate. Maybe, just maybe, us being conservative, we can go with, let's say, a 10% growth rate as well, and that pretty much brings us down to 124. And even then, Crocs certainly seems to be undervalued in this market right now. So this right here is going to be the sensitivity grid. Again, you can take a look at the growth rates, the P multiples, and kind of figure that out for yourself. But very important factor to consider is the balance sheet, which does not meet our checkpoints. Again, little to no cash with a lot of debt, low current ratio, low quick ratio. We got debt to free cash flow, which is high. And the second thing is obviously the forecasting. And can Crocs continue to grow in the future and keep expanding its market share in this particular sector as well? So 124 is going to be that level. I would be interested in the low 100s because remember, the goal is to buy a stock below its fair value, not at fair value. I mean, at fair value would still be better than buying above its fair value. But my personal goal is to buy stocks below the fair value so that I'm actually getting a good deal and I'm able to buy the stocks when they are indeed undervalued and trading below their intrinsic values. So this right here is going to be the technical analysis. Right now, we are seeing, again, a little bit of a bounce back higher from that support of close to low 100s. So this right here, again, is going to be that support level to watch. In fact, I could even start a position right now, like at $107. But my concern is the balance sheet. Again, I would be a lot more confident if the balance sheet was good. If the company had net debt, like this would be a no-brainer. Like this would already be a no-brainer. But that's something that we have to constantly monitor and see how they continue to deleverage from a balance sheet standpoint. So support level is going to stay put at about $103, $104 all the way down to low 90s for Crocs, and resistance is going to stay put all the way up to as much as this right here is going to be that first level at 130 all the way up to $150 per share for Crocs moving forward. So I hope you guys enjoyed this video and a complete update on this company. Let me know your thoughts down in the comment section below. Don't forget, brand new lower price tier channel, fundamental technical analysis and option scores bundle currently 50% off. And of course, the brand new option scores coupon code launch that does expire at the end of this month. So you can take advantage of that as well. And again, thank you so much for joining. As always, make sure that you drop a like, subscribe to the channel, link to our Discord, Patreon down below. As always, happy investing. I'll see you all in the next video.